Good morning, traders. Today is 21st of May. Welcome to your Wednesday market briefing. We've got updates on the US dollar, WTI crude oil, and gold. So let's jump in. So let's start with the US dollar. The dollar index is under continued pressure, dipping to 100.03 in early trading, marking its lowest level in nearly 2 weeks. And this latest slide comes amid renewed concerns over the US fiscal outlook, triggered by Moody's downgrade of the US credit rating from AAA to AA1 last Friday. And that downgrade echoes past moves from Fitch and S&P and is drawing attention back to America's rising debt levels and budget deficit. And markets were further spooked after President Trump's tax proposal was passed, adding fresh tax cuts with no offsetting spending reductions. And at the same time, global trade tensions remain unresolved. Treasury Secretary reiterated over the weekend that Trump still plans to impose tariffs on countries unwilling to negotiate in good faith. While this gives the dollar some geopolitical leverage, it is also feeding the market uncertainty, especially with safe haven currencies like the yen and Swiss franc gaining ground. And from a technical perspective, the dollar index remains stuck in a consolidation range between 99.2 and 101 after peaking at 110.18 back in January. And RSI is holding near 46, suggesting neutral to soft momentum. And MACD also shows a modest buy signal. A resistance is at 100.59 and 100.95, while key support remains at 199.61. And a confirmed break below the 100 mark could accelerate the selling pressure. And moving on to the crude oil, WTI is trading just above $62 this morning, maintaining recent gains. And several narratives are playing out. First, there are signs that the US-Iran nuclear negotiations have stalled. The US envoy stressed over the weekend that any deal must include a full halt in uranium enrichment, a red line for Tehran. That breakout in talks have helped to keep the oil supported. However, broader economic concerns are limiting the upside. The Moody's downgrade has cast doubts on US demand growth, and China's latest retail sales data came in softer than expected, raising flags for global consumption trends, especially since China is the world's largest oil importer. And from a technical standpoint, oil is still in a gradual uptrend of in May. The price is comfortably above the 20-day moving average and 10 days moving average in a bullish crossover. However, prices are facing strong resistance at 50-day moving average near 63.6 with the next psychological barrier at $64. If that level is broken, bulls could target the April highs. But on the downside, a pullback below $61 or $60 could signal an exhaustion and bring 58.83 in focus. And lastly, let's talk about gold. Gold is catching a fresh beat today, up 2% and trading just above 32.95 an ounce. And the move is driven by a combination of US dollar weakness, persistent geopolitical risk, and continued doubts about the macroeconomic outlook. And the US credit rating downgrade is weighing heavily on bond sentiment, which has pushed some investors back into the safe haven assets like gold. And there's also uncertainty surrounding the trade policy, with Trump continue to push tariff threats, even as ceasefire talks are reported between Russia and Ukraine. And his recent remark that the US may not need to be involved in those negotiations raised more questions than answers. Meanwhile, fresh sanctions from the EU and UK on Russia are only heightening global tensions, which is another driver of the safe haven flows into the precious metals. And technically, gold has broken out above its 34 moving average at 32.48 and is trading just below the psychological level 3300 level. And RSI has climbed above 50, signaling bullish momentum. And MACD is trending positively. A resistance lies at 3300, followed by 3324 and 33 at 50, while the initial support remains at 3248 and then 3200. A pullback to those levels may offer buying opportunities if broader macro sentiment stays risk off. So to wrap it up, the markets are in holding pattern. The dollar is soft, oil is steady, and gold is regaining strength as uncertainty drives demand for safety. So thank you for tuning in, and we'll see you tomorrow for the next update.